College students walked out of class March 14th as part of the virtue signaling National School Walkout that was held in support of the Parkland school shooting victims.
National School Walkout.
And call for new gun
when is that?
control.
I don't know.
They stood on the football field
Apparently I
and
missed that.
huge heart
It already
because
happened.
the
Dang it.
brain
I didn't
would
get the
not
memo.
About 75
Right?
students participated in Friday's 20-minute walkout.
It happened
at
last week,
Rockledge.
I think.
Rockledge
Yeah.
Principal Vicky Hickey, no kidding,
Vicky
that's her
Hickey.
name, said the school treated the Second Amendment walkout exactly like it had treated the anti-Constitution walkout 2 weeks earlier. She dared
What are we
not
talking
do
about?
otherwise because the backlash against
I
grabbers
was hoping
exploited
mortgages.
Parkland kids.
You want to talk about the
It's going
QM
to
stuff,
be
the
nuts.
non-QM?
Sure.
I'm Lyndon Jocelyn, and that's the way I see it.
Lyndon Jocelyn commentary.
Brought to you by Humble Amco, 1904 FM 1960 Bypass East in Humble.
Are you tired of high cable TV rates? Sign up for
Ooh, I
Dish
like
today
this.
and get a $500
Yeah.
bonus offer while supplies last. Plus, lock in your price for 2 years guaranteed. Call All-American Dish, your Dish authorized retailer now.
800-344-2066. 800-344-2066. That's 800-344-2066. Offers require credit qualification, 24-month commitment, early termination fee, and e-auto pay. Restrictions apply. Call for details.
The following program, paid for by Right Path Real Estate, does not necessarily represent the views or opinions of the staff, management, or ownership of this station. It's time to get on the right
But I always
path.
feel like it should.
Right Path Real Estate Radio with Tom Perry. Get the answer to your question that's keeping you from taking action and succeeding today.
Welcome to the show.
Get ready. The guy that will put your fears behind you is on the air now. Taking calls at 713-785-1817. Toll free 877-881-0271. Now here's your host, Tom Perry.
Hot mics.
Hey, welcome to the show. Right Path Real Estate Radio, 713-785-1817. 713-785-1817. Joined live in the studio, Jennifer Hernandez with the Legacy team, Legacy Mutual Mortgage. It's actually the Jennifer Hernandez team, right?
Yeah.
Legacy Mutual Mortgage. I'll get that right.
That's
Phone number
okay.
713-579-3600. Web address is jennifer.legacymutual.com. So let's talk about mortgages today.
So last week I talked to you and Jason about some programs that we have for investors.
Right.
You guys refer to it as the non-QM stuff.
Sure.
So if you're listening...
for the people listening, non-QM is non-qualified mortgages.
Right.
So there's qualified mortgages. In other words, they meet the guidelines for Freddie
Fannie
and
and Freddie.
Right.
Mm-hmm. And then there's more private hybrid investors that don't follow those guidelines, but the rates are higher. It's just a different pool.
But when you
of
say higher, I
investors.
mean like a mortgage that qualifies for Freddie and Fannie right now is about what?
High fours.
Okay.
Well, for investors, it's low fives.
Okay.
Low
But
fives.
if I'm buying my own personal residence, what's the best I can do right now? Great credit, great job, all that kind of stuff.
I mean, 4.625, 4.75.
Okay. So in the 4.6s, 4.7s. But as an investor, a non-QM mortgage, not like it's going to be 9% or anything like that. What's going to be typical?
No, I mean it's 6 to 7
Okay.
with a couple of points
Yeah.
probably. Yeah.
When you say a couple of points, you're talking about origination.
Yeah,
So
origination.
if you're doing a $100,000 loan, 2 points on the front end is $2,000.
Yes.
Okay.
And if it's a refi and there's enough equity in it, you can roll it. You can roll in
Yeah, you're
closing
not
costs.
bringing out of pocket the $2,000. You can finance the $2,000.
Yeah.
Add to the mortgage balance.
Yeah.
Right.
It's a beautiful thing.
Right.
So basically, we do have 30-year fixed product. So when you're an investor, there's really the two pools that you fit into. When you're less than 10 properties, it financed, 10 properties financed.
Correct.
It can be more properties owned, but just financed, and that includes owner finance, any kind of finance. You really should go the Fannie Mae route just because the rates and the points are better.
It's a better deal.
It's a better deal.
Yeah.
It's a better deal. And so once we max that out and you have more than 10 financed, we have a couple of investors that we sell to that will allow unlimited properties. They just want a certain concentration with them. It's 3 to 5 million, which could be, depending on the loan amounts, multitude of properties.
Unlimited properties up to about 3 to 5 million. They don't want to have more than $3 to $5 million with any one investor,
that
right?
they're servicing. Yeah.
Got it.
So, So,
which could get you $5 million. Could get you another. If you're going $100,000 properties, get you 50. If you're doing $200,000 properties, get you 25. So around 30 properties,
Right.
if they let you go to the full $5 million.
yes,
Yeah.
that's right. So basically, max loan to value is 70% of
Okay.
the value. One of the investors will allow you
Now,
to
is that 70% of the appraised value, or is that 70% of the
Yes.
purchase price?
appraised value.
Okay, got it.
And so one of the investors actually will allow you to use just the rent schedule.
Yeah.
We call it a 1007 schedule for income. They don't even look at tax returns.
Okay.
So you just have to have a 3-year history of managing properties.
Got it.
So as long as you've managed, a few properties for at least 3 years, then you're okay to qualify for that. So we use that to qualify for income. It's kind of a net rent where we take your rentals times 70%.
So they're
and
gonna
minus any
basically
debts.
take away 30% of the rental rates right off the top. So if you've got a $1,000 a month rent, they're gonna take $12,000 for the year. They're gonna take 70% of that right off the top, which is $8,400. So $8,400 counts towards your income for debt to income ratio, right?
Yes,
Okay.
and then you have to offset it by the debt, the
Right.
tax and PITIA,
Yeah.
including association dues. So we get all that, and then we get a net income. So we'd get copies of the leases. And
Yeah.
so that could be a good way for people that have a lot of properties.
Right.
Could be a great way to qualify. Credit needs to be good. It needs to be in the 700s,
Okay.
a 700 and above. So there is another way, too, that we can not qualify that way, that we can qualify just with tax returns either way.
Okay.
So there's a few ways we can go, but it's a good program. That
And they've
can
got
open up
15,
financing.
20, 25, 30-year AMs, that kind of stuff.
Yeah, and you can get a 30-year fixed, or you could get a ARM, 7-year ARM. The savings on the rate's not that much, but some people might want to do it.
Right.
But yeah, it's a good option.
But that 7-year ARM means that the rate can adjust in 7 years, but it doesn't mean that because that's the problem that you see sometimes people going out with a portfolio loan is that they may get a 25 or 20-year amortization, but they've got either a 5-year or 7-year balloon, which really has not only the interest rate risk but the refinance risk, because banks, appetite for risk changes and appetite for market changes. They may say, "Oh, we don't really love, buy and hold rentals in single family anymore." I mean, it's unlikely, but it's happened in the past where they've just said, "Nope, we're closing it down. No more of
Yeah.
that."
That's right.
And you've got to refinance out because the entire balance is coming due. And so we like longer term financing.
Yeah.
For cash flow.
Even if you're paying 0.5% more, I think it's worth it for not having to worry about what are you going to do in 7 years.
Yeah.
Is that product going to still be there? What are the rates going to be? Rates are still relatively low.
We listened to a speaker last night, Eddie, if you know Eddie Gant, and he was speaking at the landlord workshop last night. That's an invite-only type of event. And there were probably, I didn't get a final count, but over 100 people there that only
wow.
are interested in landlord investing. And so if anybody's interested in landlord investing, you have to qualify to get into that group. It's an invite only. It's not something that gets blasted out to everybody.
Oh,
but
wow.
but you can send an email to support@rightpathrealestate.com. But he was talking about he does buy and hold for long-term wealth. Some people do it for income. Some people do it for wealth building. And so he finances all of his properties on 15-year notes. And, he's not necessarily living. He's got other businesses. He's living off the cash flow, but he's really looking for, at the end of 15 years, how many houses. And he's about 9 years into that program. So
Wow.
not killing it on cash flow, but just imagine what's going to happen as he starts. And I think he started this. He's like 9 years into this 15-year plan.
So the thought is those properties are appreciating when he does sell eventually down the line.
Not even sell, but just imagine what the cash flow will be when all of them are paid off.
Yeah.
He'll have not only the appreciation, because, we looked at one property, and we've talked about this particular property over and over. It's not an isolated incident. Some people may think, well, you keep talking about that same property, but it's not that it's isolated. It's just that, we haven't run it on a bunch, but we know that it exists. But there's a property we bought. I remember it was in when I was still actively going out and running leads. So it was about 4 years ago. And 3.5 maybe. And I remember walking into this house. I remember everything about it. I knocked on the door. I remember the lady opened up, and there was no furniture inside. And it was a house that they had lived in, but they had already previously moved. It was in really nice condition. It needed a little bit of updating, but it was really, really nice. And so I remember there was another two investors inside, and they were measuring the kitchen countertops and the cabinets and all this stuff. And I'm like, that's kind of weird. I mean, anyhow, so I ended up asking her this question. I said, hey, you and your husband have probably talked about what's the bottom number that you wouldn't go below. And she goes, yeah, we've talked about that. I go, I don't suppose you'd share that with me. And she goes, yeah, we won't go below 65,000. I'm like, well, I'm not saying that I can, but if I could get to 65, I mean, what would happen next? She goes, well, I talked it over with my husband, but yeah, we've already talked about it. We'd do it. I'm like, yeah, but you probably have to get an offer from these guys, that are already here, right?
That are measuring.
Yeah, that are measuring. She goes, no, we just go ahead and sign it. I'm like, okay, well, let me call my business partner, C. So higher authority close, right? And I called him out, hey, Jason, what are you doing for lunch? And, check this number out and I put a 120 ARV on it and less than 10,000 of repairs, right? So sure enough, we bought it for 65 and we put 8,000 in it. So we're all in for 73 plus some closing costs, right? And some cost of money. And we sold it for 119.9. So, I mean, as a flip, right? What I wish we'd have done is put long-term financing behind that, which was more difficult back then because 4 years ago, the credit markets were much more difficult. They've loosened up some, especially in that marketplace for refinancing and what it takes to qualify and all those things. But we had so much debt at the time because we were flipping a lot of houses. So because of our debt-to-income ratios, there were no alternatives really like this. But in the meantime, we could have rented that house. It was rented for like $1,200 a month. Keep in mind that would have cash flowed about $400 to $500 a month based on where we were. But right now in that same neighborhood, those same houses, that same square footage, they're going for $160 just 3 years later, 3.5, almost.
And the rents are going up.
And the rents are now $1,500 a month.
Wow.
And we lost out on, we killed it, let's say, on $37,000 on a flip in the 120 price range. I mean, that's a tough price range to flip houses. But it'd be 160 today. And it's just going to go up because they're not making any houses sub 200. I mean, in another 4 or 5 years, it would not shock me at all if that's a $200,000 house. And in just 8 years' time, can you imagine if you did that? 100 times, you'd have $8 million over a 10-year period of time.
Yeah, it's amazing.
Yeah.
It's amazing. So there are, financing options. I know you were saying that market is really not open. I mean, there's just not a lot of places that people can go. So give me a call, 713-579-3600. Ask for Jennifer Hernandez. They'll get you to me or someone on my team. Or visit me on the web, jennifer.legacymutual.com.
Now, one other thing I want to touch on, because I know everybody's talking about it, interest rates are rising. But when they're talking about that the Fed's raising the interest rate, that's not mortgages that they're talking about. They're talking about the short-term interest rate. How short is short-term?
Short-term is overnight. So they're talking about the overnight federal funds rate that they do emergency loans to banks on.
Okay, so if banks have lent out too much money, and a lot of people are like, hey, it's Friday, we're going on a vacation, so they pull their money out of the bank as whatever they've got on deposit. So there's always have to have a certain amount on deposit, so they can borrow from the Federal Reserve at that rate. That rate's going up a quarter point at a time, expected to go up 4 times over the year. Whether it does or not, who knows? But that's not directly related to...
No.
So mortgages are linked to the 10-year Treasury.
They most closely resemble the 7 or the 10-year bond.
There's a correlation there. One doesn't cause the other rates, but as there's a trend, right?
No, but if the federal overnight funds are going up, it's because the economy has signals of strength.
Correct.
And if that's happening, then investors, hedge funds, whoever, are taking their money out of bonds saying, hey, I'm about to go kill it in the stock market.
Right.
So I'm going to put my money in the stocks, and they take their money out of the bonds.
And that causes rates of bonds to go up.
That causes rates of bonds. Yeah, the price goes down, the yield goes up.
So when the stock market's crashing like it has this last several days, typically money's coming out of the stock market, going into bonds. Then and we keep mortgage rates good.
Yeah, so if you hear bad news
and about the stock market,
the stock market was down
today. Good for mortgages,
and it
good
crashed,
for real estate.
It's good for bonds. Yeah.
So it seems like, if you're in real estate, when the market does poorly, real estate does great. But it's not that when the market does well that real estate does bad, because people when they're killing it in the market, they go out and buy more houses, right?
Yeah.
So either way, real estate wins.
Real estate is a winner.
Yeah.
And everybody should have some in their portfolio.
Right, absolutely. So more real estate, less Bitcoin.
Oh, yeah. I won't do that Bitcoin stuff.
Right. So it's jennifer.legacymutual.com, 713-579-3600, 713-579-3600.
Do we have any questions?
Let's see.
No questions.
No questions.
Good morning.
Good morning. Lots of
People
people
are saying
saying
good
good morning and
Yeah.
enjoying the show. Okay. So our 2 minutes is up, right, Nikki?
Yes.
All right. Thanks.
Mike's off.
Thanks. Well, thanks for coming in.
Yes, that'll be
Are
fun.
you expecting to close accurately,
gets
on
up
time,
from
and with
10,
lots of communication on your home purchase?
It's
You've come to the right place. I'm Jennifer Hernandez, Senior Loan Officer with Legacy Mutual Mortgage. Our goal is to give our borrowers and referral partners an amazing experience during the loan process. My team believes in putting people and culture before results. Our company concentrates on building those teams who operate with structure, process, and recognition for going the extra mile for you. This way, we have the energy to make this your best home purchase ever. Give us a call today to find out the simple steps to get started. I'm Jennifer Hernandez, the Hernandez team at Legacy Mutual Mortgage. Jennifer.legacymutual.com or call 713-579-3611. Again, Jennifer.legacymutual.com. We can't wait to consult with you soon. NMLS 514497.
Equal Housing Opportunity Lender. NMLS 514497.
Did you know that there are over $24 trillion in retirement accounts in the U.S.? Imagine if you could use someone's IRA to fund all of your deals. Well, you can. Quest IRA is based locally here in Houston, Texas. At Quest IRA, we offer retirement accounts that can be used to invest in real estate, promissory notes, private entities, and much more. Many of our clients loan money from their IRAs to fund real estate deals all over the country. We don't sell any investments or give advice. However, we do hold free networking events, weekly educational classes, and free consultations with an IRA specialist. For more information, visit our website at questira.com or call us at 1-855-FUN-IRA.
5 minutes, yeah,
To tap
right.
into the $24 trillion in retirement accounts in the U.S., call Quest IRA at 1-855-FUN-IRAs
Oh, yeah. Yeah.
or go to our website, questira.com.
You just messing with
Are you
me.
looking for an investor-friendly general
I'm not-
contractor for your investment property? Then call Fast Track
Oh, yeah. Okay.
832
Oh,
742
Spark? Yeah.
9992,
Get it from
or
Advocare?
reach us on the web at
Yeah. You ever heard of
fasttrackremodeling.com.
Advocare?
Fast Track Remodeling specializes in turnkey
Yeah.
remodeling of single-family
Yeah.
investment
I've been taking
properties.
Spark since
Whether it's a
December of
flip rehab
'99.
or a rental rehab,
Yeah,
we manage
almost-
every aspect of a rehab
almost
from
20
start
years.
to finish with a highly efficient, standardized
Did you?
process.
Over
Yeah.
the last
They
6
used to a lot of
years,
gyms.
Fast Track
I'm
has
still do. I
completed
mean,
over
that's
700
yeah.
projects, which has helped us to create our 3 keys to success. Use a detailed scope of work so that everything gets done, train and maintain quality crews so it gets done right, and complete the work in a proper order so it gets done fast.
No more managing it yourself, no more doing the work yourself. Fast Track Remodeling really does manage it all.
So give us a call today at 832-742-9992. Again, that's 832-742-9992, or reach us on the web at fasttrackremodeling.com.
Hi, Clint Coons here, attorney and avid real estate investor. You know the greatest mistake real estate investors make is not understanding the potential liability that exists from owning real estate. At Anderson Business, Legal, and Tax Advisors, we specialize in protecting real estate investors in all 50 states. In addition to structuring your business for optimum protection, we provide guidance so you pay the least amount of taxes available under the law. We have 150 employees that range from lawyers to CPAs to estate planners and much more. Download our free ebook, The Invisible Investor Strategy, today at AndersonAdvisors.com or call for a free risk reduction analysis and financial blueprint at 800-706-4741. Anderson Business Advisors will help you keep more of what you earn. Call us today at 800-706-4741 and mention Right Path Real Estate.
You found or inherited a great investment property.
Wow. Hey, how much time?
Lord, 0. I'm playing that.
Oh, sorry.
Sorry.
Okay.
Yeah. You know how Ashley is. We get off topic.
I mean,
he's a great distraction.
I'm a great distraction.
Yeah,
It's horrible.
right. Yeah. I'm going to turn him down a little bit. Is that good?
Yeah, just a little bit.
Yeah, cool. All right.
Yeah, you got Jennifer, then me, and then, of course,
346-9911 or check us out online at nextgenappraisals.com.
This is Business 1110.
All right, gentlemen, are we ready?
Yes, we are, Nikki. Thank you.
All right, fellas. Hot mics.
Hey, welcome back. Right Path Real Estate Radio, 713-785-1817. Did a quick change during the break. Mr. Ashley Patten, Patten Law Firm, is joined live in the studio. Welcome to the show, man.
Hey, Tom. Thanks for having me.
Yeah. So we're excited about the Dallas event.
We are. I just found out that I'm speaking at it, so it's just like it's amazing how no one tells me these things to the day of.
Well, you're not typically in the meetings. Patrick's been doing a great job representing you in the meetings and has done a fantastic job. He's really taken the lead in terms of finding the venue. I mean, he's done an amazing job. You've got a great guy in Patrick. So it's going to be at Gillies.
Going to be Gillies at 6 o'clock.
Yeah, 6 o'clock on Wednesday.
Right.
Up in Dallas. And then and it's going to be us and you guys. So it'll be Right Path. It'll be Patten Law Firm. And it'll be the guys over at Jet Lending.
Jet Lending.
So you actually have an office already in Dallas.
Yeah, we do. We have an office out there in Irving.
Okay.
And Las Colinas, actually. But, yeah, so we've been open for about 4 months. It's doing really well. It's starting to pick up traction.
So you actually have employees there, all that kind of stuff. Jason,
we do.
Jason and I, Right Path does not have an office there, but we do have students there because we've held a couple of weekend retreats up there, and so we've got some students that are just killing it. The Dallas market is hot. The Houston
really
market is hot. I mean, so you probably see it with the number of closings, which areas are hot, which ones when they cool down. What's a slow month in real estate?
As far as us or far as total?
Total.
Well, I mean, a slow month in real estate, that's the whole thing about when you're working the investor businesses. Yeah. I mean, when times are bad, there are deals happening. When times are good, there are deals happening. And so it's traditional realtors and the traditional deal.
Yeah.
I mean, we've never been in a better market than right now. Because, I mean, it's just inventory's low. I mean, I think we're like 30-day inventory, something like that. So it's actually, it's a good time.
Yeah.
I mean,
I remember in the early days when I was starting Fast Track, and I was looking at if I'm going to start a construction company, do I want to go retail? Do I want to go investor? And I realized there's not that up and down cycle, especially like from Thanksgiving to Christmas, New Year's, all that. Nobody's really doing kitchens and baths retail wise. I remember I got this call from an investor the week of Thanksgiving. I'm like, hey, I'm closing on the Friday after Thanksgiving. I mean, when can you start? And I'm like, I love this business. I mean, there's no downtime. And when there's deals to be had, I mean, there's somebody wanting to make money.
Right.
Because there's opportunity out there. So
see, like our Austin market right now, I mean, January we had a horrible month. February we had a horrible month. And the reason why is just because Austin is more traditional.
Yeah.
Traditional rather than investor. I mean, it's just Austin is your
more retail,
less
investor.
So come next month. I mean,
June, July, August, you're going to kill it.
Oh yeah,
yeah.
I mean, that's when we kill it every time in Austin. So sorry about that.
That's right.
So I'm throwing pins over here, but yeah. So it's just but Houston. I mean, we funded 352 loans in our gallery office, which is just
that's killing it.
Yeah, it's our best month ever.
Yeah,
as far as one office goes.
That's a lot for one office.
Yeah.
Now you've opened up a second office in Houston.
We got Cypress office. It's coming up in line. So we've signed we've inked the deal.
Lease.
Yeah, and it's we should be open there. Hopefully inside of 3 weeks.
Fantastic.
And we're actually going to send one of our escrow officers over there to where he's been with me 14 years and. He deserves a promotion.
That's fantastic.
Yeah.
So he'll be the office manager.
He'll be Oscar Macia.
Oh, fantastic.
Yeah.
So here's what I know is that before I got involved as an investor, I really looked at all title companies as the same. Whether it was brand A, brand B, brand C, brand X, Y, or Z, they were all title companies, a title company, a title company. But now that we've done 450 transactions in the last 4.5 years, I mean. You realize that, man, not all title companies are created equal.
Oh, no. No. It's being from Louisiana, we have a term called lagniappe, something more for nothing more.
Right.
I mean, so we're a law firm / we're a title company. Now, we don't charge anything more for being a law firm. I mean, I will work with you up to the point where I have to put on a suit and tie or write a demand letter.
Do you own a suit and tie?
I do, unfortunately.
for weddings and funerals, right?
For weddings and funerals. Well, I don't know if it's a wedding or a funeral, but I'm getting married too, so it's...
Oh, no.
No, I'm just kidding, Nikki.
Right.
So anyway, it's it's just every title company is not the same because most title companies, they're good at doing the jigsaw puzzle.
Right.
You know, you've got the big piece of property, and you know you're closing different blocks, you know, different lots and blocks of the same thing from from the builder, from the developer. But what happens with a title company is when they get the hard deals, that's when you can tell the value of a title company. Not when, you know, not every deal, but it's when the deal goes south.
Right.
That's what tells a good title company from a bad title company, because we have been able to save a ton of loans out there just because, it's not necessarily that we're doing anything special. Mm-hmm. It's just we know what to do. That sometimes a little bit goes a long way.
Yeah. You know, I related a look. I've got an insurance background, and I related a lot to, any life insurance company can write that 25-year-old guy that,
right.
is works out all the time, and he eats right, and he's exercising, and he's fit, he's got a good, and he's got no cholesterol, and his blood pressure is super low, and, is healthy. I mean, he's probably going to live another 100 years.
Right.
He's 25 years old, right? And he wants to buy a 30-year term product. Anybody can write that guy. There's no difference, right? It's when you get that case of that, 57-year-old smoker that's, type 2 diabetic, and he's taking it. I mean, it's like when you get that tough case, that's when you really separate who
that's
are
right.
the life, and it's the agent that really knows, well, I can put you with this company because the underwriting does this, or I can put you with this company. That's really what I see that people miss, that a title company is really an insurance company first and foremost. So
That's right.
You've got underwriters with different personalities, and I remember, life insurance underwriters, depending on the day of the week,
right.
What mood they were in, or like sometimes you keep pushing back on a particular. I remember sometimes be trying to get somebody to get a slightly better rate or something like that, and finally this guy was like, okay, I see your point, because you can really argue with these.
Right.
I mean, once you develop that relationship.
And that's a whole other thing. I mean, we've got 9 different underwriters.
Yeah.
And so because of that, I mean, some underwriters are in a bad mood. Some underwriters say, hey, they'll do this type of deal. They won't do this type of deal. And so it's we shop our underwriters. And a lot of times you have one that may say yes, maybe say no. But if they know another underwriter is going to write it, they'll say yes every time.
So how hard is it to get? Sometimes in the investor world, we're buying properties where title is what we call dirty, right?
Right.
And so somebody else has bought a property not. Why would anybody buy a property not using a title company?
Suicides, financial suicide. Because the thing about title insurance, it's cheap.
Yeah.
It's a one-time fee, and you're looking at about a percent of the property, which may sound expensive to some listeners out there, but if there's a claim, usually involves the loss of your entire principal.
Right.
I mean, so if you buy a house and there's a claim, you will lose the house a lot of times. Somebody claims an interest, such as, with dead people in title. For instance, a lot of investor deals, you're buying homes that have never been insured before because, quite frankly, the people who have the property a lot of times don't even realize they own the property.
Right. We run into that. Right.
And so for, 1 generation, 2 generations, 3 generations, there's a lot of things that can come out. And once the property sells, that a lot of times that's when people start looking at, because maybe an heir drove by their great-grandma's house every now and then and said, hey, that's where I used to live.
Yeah.
And all of a sudden they see a for sale sign.
Right.
Or they see a sold sign, or they see a house being built up, and then that's when the claims start happening. So it's it's a good thing to where you just basically, if you're selling, you just budget the title insurance in your property. And if you're buying, generally the assumption is the seller is going to be paying for it, but that's not always the case.
Right.
It's negotiable.
Yeah, that's an important point, that you don't have to just accept that the seller's paying for that.
That's right.
And okay, so you mentioned a budgetary guideline. What's a good number to plug in?
About a 1.25% will be title company fees, third-party fees
for the whole closing transaction.
Yeah,
everything
for
about
everything.
1.25%. Okay,
correct.
Got it.
Yeah, title insurance is regulated by state law. So a $100,000 loan is $823. And it doesn't matter what title company you close at; it's all the same price.
Yeah, so that's I think that's sometimes why people say, "Oh, all title companies are the same," but that's not it. It's the service.
It's the service. That's
and then the other thing is there's other fees on top of, and that can vary a lot from title. And y'all have some of the best fees in the marketplace.
We do.
Yeah.
We do. It's unfortunately, we're we try to keep it right there in the middle line. So we're not the best because
not the cheapest.
Yeah, I've seen some title companies that basically give away their escrow for free. But what happens is those title companies that do that, they're generally not here.
Yeah.
I mean, you always see the.
Well, they're giving away their profit, right? So
that's exactly.
And a company's got to make profit to stay in business
Right.
long term. They've got to
Right.
have cash flow to stay in business short term. So I'm joined live in the studio. It's Ashley Patten. He's Patten Law Firm, Texas American Title. It's plfpc.com, plfpc.com, 713-621-5808, 713-621-5808. Brian says, thanks for doing the show. Info is great and helpful. That's because I bring on great guests. And, it's when you surround yourself with experts and really smart people, then you always appear to be smarter than you actually can be.
And it's amazing. Like I'm running investors all the time. They're like, oh, yeah, I heard you in Right Path. I mean, it's just it's neat because you have the name recognition just through y'all show, which is to me, I commend you.
Well, thanks. And y'all have got a big event coming up, Suds and
Bugs.
Suds and Bugs. So you're going to eat mosquitoes, flies, what kind of bugs?
Little crawfish.
Y'all get some of the biggest crawfish.
Well, being from Louisiana, I mean, I'm very finicky. Yeah, very, very, very finicky,
Yeah.
and I do have the hookup. So it's and they're, I mean, when you make crawfish, so many times they put the crawfish out, they sprinkle some hot sauce on top of them. That's garbage.
No,
I mean,
right.
you got to marinate them with them.
Right.
You got to see them. You got to, it takes about 4 or 5 hours of just sitting there cooking, which, quite frankly,
now you're not the guy cooking them all, right?
Oh no.
Okay, good.
No. But it's just a.
But you're the quality control guy, right?
Absolutely. Absolutely.
So y'all actually have a speed eating contest.
We do.
Get to put together teams. It's there's within the Houston market, I'm amazed at how much friendly competition there is among investors and things like that. There's only a handful of what I call bad players in this marketplace.
Right.
I'm sure you see that, right? And there's a person that I just heard about. There's a new bad person in the marketplace. We'll talk a little bit off air, but what they're doing is when a wholesale deal gets sent out, they're going in behind the contract. And they're basically going directly to the seller and saying, "Hey, what did they offer you? And I'll offer you more," and which is tortious interference,
right?
And you can go after but things like that won't last because we're a pretty tight knit community. Competitors are always welcome, but let's do things with integrity, right?
Right, exactly.
And so what I find is when you get out to an event like this, and it's one of the best events of the entire year, is y'all's event there. And so what are the dates of that event? All right, you probably don't know off the top of your head, but go to plfpc.com.
That's right.
It's going to be on the website, plfpc.com.
It takes time for saving me.
Or you can call them at 713-621-5808, 713-621-5808. If you've got a deal to do, you got to give Texas American Title and Patten Law Firm a call. That's 713-621-5808. Make your closing go smoothly. I mean, I love
Tom,
is...
I appreciate it.
Yeah, y'all do a great job. Thanks a lot.
Thank you so much for having me.
Yeah,
appreciate
thanks.
it, Tom. All right, bye-bye.
Mike's off, guys.
Time is money in a real estate deal. If your insurance company is slow and non-responsive, you could lose a deal like that. You need a quick turnaround on quotes, binders, and the agency for that is Benchmark Insurance Group of Texas. The team at Benchmark understands the investor mindset. They know what you need and when you need it. It's there for you. Call Houston's leading real estate risk management experts. Benchmark Insurance Group of Texas, 281-569-4353. That's 281-569-4354. Or online at benchmarkbrokers.com.
Selecting a foundation company and their product for repair is a lot like a game of chance. You simply don't know what you're going to get. The foundation repair as a whole
that was so funny.
Patrick
woke up and was like,
nor is it regulated. However, Foundation Check utilizes professional engineers to review all of our files to give you the best foundation analysis in today's market. Remember to check before every repair. Call 346-702-3825 or you can reach us online at foundationcheck.com.
Are you a realtor or seller that is concerned about the new TRID rules and closing on time? I'm Jennifer Hernandez, Senior Loan Officer at Legacy Mutual Mortgage.
See you, man.
We have
Thanks. All right.
mastered the 30-day
That's
close.
okay, man.
We close on time, accurately, and with tons of
it's okay.
communication.
I know you know me.
A dedicated team of a coordinator and a
we're
contract
actually
close associate. Give me a call today at 713-579-3611, and let's talk about how we can help you on your next transaction. NMLS 514497.
Are you looking for an investor-friendly general contractor for your investment property? Then call Fast Track Remodeling at 742-9992 or reach us on the web at fasttrackremodeling.com.
Fast Track Remodeling specializes in turnkey remodeling of single-family investment properties, whether it's a flip, rehab, or a rental rehab. No more managing it yourself. No more doing the work yourself. Fast Track Remodeling really does manage it all.
So give us a call today at 832-742-9992.
Hello, real estate investors. Do you need a lender that moves fast at the speed of a jet to fund your investment properties? Jet Lending will help you purchase properties quickly with as little cash out of pocket as possible. Jet Lending also sets up a repair escrow fund to help you with repair costs. Jet Lending is your fast and friendly hard money source for first-time investors and seasoned professionals. Call 281-872-7800 or email us at info@jetlending.com.
Taxes. Just the sound of that word makes people cringe. At Anderson Advisors, we provide tax reduction through asset protection for real estate investors throughout the country. Our unique philosophy has CPAs, lawyers, bookkeepers, and estate planners with one common goal, helping you, the real estate investor. Check us out today at AndersonAdvisors.com. And don't forget to tell us you heard about us at Right Path Real Estate.
You found or inherited a great investment property. Problem is, you don't know how much it's worth, or more importantly, what to do to maximize your investment while mitigating risk. This is exactly why we started Next Gen Appraisals. Next Gen is a group of appraisers specializing in investment real estate. We understand that investors aren't just looking for a number of what their property is worth, but a comprehensive analysis of the market. Give Next Gen a call at 713-346-9911 or check us out online at nextgenappraisals.com.
Are small returns getting in the
30
way of
seconds.
your retirement?
All right.
Why settle for mediocre results? There's a better place to invest. The experts agree. Single-family real estate is one of the best investments.
Yeah, Brian,
you
I
can make.
just looked it
Find
up
out how
on
JD
my
Fund
email,
Services
and it is
offers a 9%
May the
preferred
10th.
return and up to a
That's a
13%
Thursday.
waterfall. Call us today at 281-915-0906.
And, yeah, it's
or visit
Thursday,
our
May
website,
10th.
jbfundservices.com. That's 281-915-0906. This investment is offered to accredited investors.
This is Business at 1110.
All right, here we go. Hot mics.
Another one bites the dust. That was a great concert when Freddie Mercury was live. I can't let that go too long, so otherwise Facebook will pick it up. All right, so Brian, hopefully that helps. So before we went on break, we were talking about the Suds and Bugs, and it is a great event. You definitely want to be a part of that. It's Thursday, May the 10th. Whatever's on your calendar, you probably need to cancel that. In fact, we probably won't even do a free event that Thursday, May the 10th. We'll have to talk about that next Monday, and so that'll be fantastic. So, I'm back. You're back with Right Path Real Estate Radio. My name is Tom Perry. Jason Bible and I, we own a company called Houston House Buyers, and we've bought, fixed, and flipped a ton of houses. I think the last count's a little over 450 houses in the last 4.5 years. But it's not just buy, fix, and flip that we do. But obviously, if we've done that many houses, we know how to do a flip in a house. And one of the things that people I see make a mistake all the time is the price range that they're wanting to flip houses. Oftentimes, in order to lower risk, people play what I call small ball. They want to buy a house for like $70. They want to put $8,000 or $10,000 into it, so they're all in for $80 and then sell it for $120. And although that can be done, and so here's the caveat: when I say it can be done, then most people think, oh, well, if it can be done, then I can do it because I'm smarter. And it's like we talk about chasing alpha, right? It's like everybody's an alpha. It's like, oh, I can do it. It's just attitude. It's going to win. I'm jamming, blah, blah, blah. But, it's not like, I could throw, 50 quarters up in the air, and they could all land on their edge. It is possible. It could be done. I mean, it probably won't happen on the first throw. But, throwing an infinite number of times, in theory, you throw 50 coins up in the air and all of them land on their edge. It's theoretically possible. But even if it happened once, would you want to build a business model out of that, right? I mean, I don't even know that I'd want to try one coin and build a business model out of, hey, I'm going to make money every time it lands on its edge, right? And so by the same token, you look at, is it duplicatable and scalable? one of the phrases we talk about around here, it's a cliche, but it's, a blind squirrel gets a nut every now and then. But do you want to hire a bunch of blind squirrels if you're in the nut hunting business? Do you want to hire a bunch of blind squirrels to go out there and hunt that for you? No, probably not. And then, so what we're talking about is one of the big mistakes that I see investors make is the price range that they want to flip houses. We like flipping houses in the Houston market at about the median home price or above. Median home prices, or maybe just a little below. We like $200,000 houses and above, because then we're not really competing with the buy and hold investors. Buy and hold investors are really very, very active. Used to be 150 and below. They're stretching up right now, because we can get such great deals on one-time flooded houses. Houses that pre-flood were 175 or 180 ARVs. Investors are buying those now. So it's really from 180 and below that buy and hold investors are very, very active. Well, buy and hold investors can always pay more for a property than a guy that wants to buy, fix it, and flip it. And if you want to learn a lot of the reasons why that is, you're like, oh, didn't know that. Why is that? But, in this radio show, I can touch on a few of the reasons, but if you want to learn more details, what you really ought to do is go to our Right Path Real Estate website. It's rightpathrealestate.com. That's right, R-I-G-H-T, path, P-A-T-H, realestate.com. And register for our event. We do a 3-day weekend retreat where we talk about this topic and many, many others. And so just know that a buy and hold investor right now is paying 85, 90, even 95% of what we call the predicted future value minus the cost of repairs, because a buy and hold investor doesn't have the closing costs. So we were just talking with Texas American Title and Patten Law Firm, and so he's talking about the closing costs when you sell the property. So when you sell the property, we budget 10%, 3% for the buyer's agent, 3% for the seller's agent. We budget 2% for title, even though Ashley said it's about 1.25. I'd rather budget 2% and have it come in at 1 or 1.25 than to go the other way. Budget 1.25, or even 1%, and it comes in at 2%. So there are some variables in there. And then the second thing is we have negotiation after the sale. So this is some of the other concepts we talk about in weekend retreat. So 10% on the sales, well, that means that if I buy a property for $200,000, it's going to cost me $20,000 when I sell it. Well, that's an expense that a buy and hold investor doesn't have. So when he's calculating what works for him, he's doing a lot on cash flow. The other thing is he can capture appreciation as part of his overall return profit strategy that a flip investor doesn't have. Normally, a flip investor doesn't own the property long enough to be able to capture appreciation. Occasionally it happens, but very rarely. If you're talking about, 5 or 6 or 7% over a year, a flip investor wants to be in and out in 90 days to 180 days, or a shorter period of time. So if you're competing that price range, and the other thing is on the small ball, a lot of investors want to keep the repair estimates on the property relatively low. And again, when you're dealing with less expensive properties, and you're talking about small repair numbers, you're competing a lot with buy and hold investors, and they will win out every single time. If you're going in an auction, it reminds me a lot of, like, if you've ever watched these high dollar car auctions, like the Mecum auctions or things like that. What'll happen is you've got people that are internet gazillionaires, right? And you got some guy that's been saving up his money and wants to buy that, that car that's nostalgic for him, a car that he remembers as a kid growing up. And, some guy comes along and wants to buy 8 or 10 cars because he can, So it's like, do you want to compete against that guy that has unlimited resources like that? Well, a buy and hold investor to a flipper essentially has unlimited resources. So why not play where it's like you want to fish where the fish are, right? You don't want to fish in a desert. You'd like to fish, first off, let's start, in a body of water that has fish in it, right? You want to improve your odds. So when you're doing that, best place to buy flip properties are in neighborhoods that people want to live in. And the best place to buy and holds is in neighborhoods that people want to live in. Well, you say, okay, well, that's the same. No, it's not. The price range for buy and holds is best below $180,000. The price range in Houston for flips is above $200,000. Now, some people have been saying, hey, Tom and Jason, are y'all changing your message? No, our message has stayed consistent. What we recognize is as the market changes, because we're doing real estate on a regular basis, like daily, We average a house every 3.5 days. I just bought a house yesterday over the telephone. I saw it Saturday a week ago. I spoke at an event down in Corpus on Saturday, and I was driving back up from Corpus. I had an appointment to see a house, walked through it. It smelled atrocious. Smelled like money, right? Smelled terrible. But money smells terrible sometimes. Terrible, as Charles Barkley would say. It smells terrible. So I made an offer because I really, it's one of those things, it's 2 hours away. It's going to be a pain in my side to deal with. And so sometimes people, they really feel like they're in a competitive bid situation. I realize I'm not really in that situation. And if make an offer that if I get it, I go, oh, yeah, I got it. And if I don't get it, oh, well, at that price, I would have been happy to have it, but I'm not really kind of sweating it, right? I don't really need it. I don't have to have it. So I made an offer of $9,000. Bought a 3-bedroom, 1-bath house that's livable. I mean, it needs to be clean, but it's livable for $9,000. So what I can tell you is we can teach you how to do. Now, keep in mind, if that were in Houston, I probably wouldn't have been able to touch it for $30,000 or $35,000. But because it's not in Houston, it's 2 hours outside of Houston. So where you are, you got to know your market. All real estate is local. So if you want to get local knowledge, and because of our students, we have local knowledge in a lot of different markets. We have students in Seattle that we work with very closely one-on-one. We have students in Kansas City. We have students in Pittsburgh. We have students in New Jersey and in Florida. So you're listening to Right Path Real Estate Radio, 713-785-1817. On the other side of the break, what we're going to do is talk about the other events that we have coming up that you don't want to miss out on. Thank you.
Do you have cracks in your brick, doors that stick, or sheetrock that's coming apart? Then you may have foundation movement. Due to our expansive soils in the Houston area, it's probably not a question of if you have movement, but when. Call Foundation Check for a truly independent, unbiased foundation evaluation. Foundation Check has been in business since 2009 and has completed over 1,400 evaluations.
Oh, man.
We're not in the business of repairing foundations or selling you unnecessary pier work. But we are in the business
buying properties under 130 for flips with ARVs 250. Didn't think about the buy and hold investors limiting inventory. So that's different. It's the ARV that I'm talking about. It's the flip investors that are doing the ARVs that are. So if you were buying a 130 ARV house and you're buying it for 70, and on a 130 ARV, 70% is what is it? 70 plus 21, 91,000. So you got to buy it for, and let's say you do $21,000 of repair or $20,000 in repairs. You got to be at 71,000 on the buy. That's what I'm talking about. But you're doing a 250 ARV, and you're buying it for 130. Those numbers work because you're outside of the range. Most buy and hold investors aren't buying $250,000 houses because for that same $250,000, and that house at $250,000 rents for about $2,200. But for that same amount of money, you could buy $225,000 houses that rent for $1,300 or $1,400 a month. So you're bringing $2,600 to $2,800 a month in rent, as opposed to $2,200 a month in rent. And then you're spreading your risk among two properties as it relates to vacancies and things like that. So, and you have more appreciation. So you're good in that price range of the ARV. So I'll talk more about that on the other side of the break, just briefly.
Jet Lending will help you evaluate your deals for free and give you feedback on value, cost of repairs, and potential loan amount. Jet Lending is your fast and friendly hard money source for first-time investors and seasoned professionals. Call 281-872-7800 or email us at info@jetlending.com. Oh, and don't forget about our famous Third Wednesday Super Investor Networking Meeting. Lots of fun, lots of great real estate talk. We'll see you there.
Time is money in a real estate deal. If your insurance company is slow or non-responsive, you could lose a deal like that. You need a quick turnaround on quotes or binders? The agency for that is Benchmark Insurance Group of Texas. The team at Benchmark understands the investor mindset. They know what you need and when you need it. We're here for you. Are you a rehabber, wholesaler, buy and hold, or flipper? Bundling your properties on a single policy will help save time and money. Benchmark has been in business for over 10 years, and we insure over 30,000 properties. contact Benchmark about our exclusive investor package. Call us and let us show you what we can do for you at 281-569-4353. That's 281-569-4353. Or online at benchmarkbroker.com. That's benchmarkbroker.com. That's 281-569-4353. Or online at benchmarkbroker.com.
Are small returns getting in the way of your retirement plans?
All right.
Why settle for mediocre results? There's a better place to invest. The experts agree, single-family real estate is one of the best investments you can make. Find out how JB Fund Services offers a 9% preferred return and up to a 13% waterfall. Call us today at 281-915-0906 or visit our website, jbfundservices.com. That's 281-915-0906. This investment is offered to accredited investors.
This is Business 1110.
All right, hot mic.
Hey, welcome back. Right Path Real Estate Radio, 713-785-1817. So probably don't have enough time to call in right now, so let's talk about this. If you don't have time to go to rightpathrealestate.com, you definitely want to do that before Friday because we have a property tour. You know, sometimes people say, hey, I want to get started in investing, but I really don't know what I'm looking for when I'm looking at a property. I see these wholesale deals. I don't really know, how to estimate the rehabs, all of that kind of stuff. What would it be like to go with me and Jennifer Hernandez, who you saw on the radio today, and be able to go with Fast Track and to be able to go with, experts in the field that have walked, literally thousands upon thousands of houses, and be able to ask whatever question you want about, the roof, about the foundation, about the plumbing, about the air conditioning, about what it is. Wouldn't it be interesting to know what's going through my mind when I first walk through a house and be able to know what are the first things that I look for and how do I go, where do I start, how do I analyze it, how do I put the numbers together, and then also learn what are the stories behind the properties that we're buying. How did we find the deal? How did we market for the deal? How did we analyze it? How did we come up with the offer number? All the things that get started. We're doing a property bus tour this Saturday. Starts at 8 o'clock in the morning, goes until 1 o'clock in the afternoon. So if you want to golf in the afternoon, feel free to do that. You got to register in advance because we have to know how many people are coming so that we get the right size bus. What I know is we only have a couple of seats left. Cost for that is $150. You definitely don't want to miss out on that. We also have talked to some people last night. They've been flipping houses. They've been building new construction. They feel like they're really kind of stuck in the business. They don't know how to get to the next level. I recommended they come to our Pathway to Income and Wealth and Real Estate Workshop. That's going to be April the 20th, 21st, and 22nd. It's a Friday, Saturday, Sunday from 9 a.m. to 5 p.m. Again, go to our website, rightpathrealestate.com. You can register for that event. And then last but not least, but we've got a free event to come to on Thursday. Yep, you heard that right. It's free. You could try and talk me down on the price, but you wouldn't have much success. It's going to be this Thursday at 6:30. It's going to be at our offices, 11451 Katy Freeway, Suite 360. That's right at Kirkwood and I-10 if you want to have bearings on where it is in Houston. It's going to be at 6:30, and it's free to come to. The only thing that we ask that you do is register in advance so that we know that you're coming. And then when you register, actually show up. It's always amazing to me how people will register and then just forget that they registered to come to an event. So if you'll register, it doesn't cost you anything to come except for your time, and I promise you, you will have some aha moments. It could very well be, we have many people say that is a life-changing event to come to our free event and get introduced to income and wealth in real estate. You've been listening to Right Path Real Estate. Jason and I will be in the studio tomorrow. So, and then we have an event tomorrow night at Gillies in Dallas. So make sure you listen in tomorrow and go to rightpathrealestate.com and register for the event that best suits you. Register for all of them. Thanks for listening, guys. See you tomorrow.
All right, Tom, have a good one.
Thanks. Adios.
You've been listening to Right Path Real Estate Radio. Find Jason and Tom at Right Path Real